Welcome, welcome to Just Minding My Business Media. I am so happy that you stopped by today. I am so excited to bring to you this day Joseph F. LoPresti, who is the founder of ClearPath Family Office and Arlington Wealth Management. As you all know, or you may not know, 80 to 85% of business owners regret selling their company within a year. Why? Because they didn't plan their exit the right way. So today, Joseph is here to share with us his 40 years of experience helping business owners maximize wealth, minimize taxes, and transition on their own terms. So if you want to sell smart and secure your financial future, you won't want to miss this conversation. So welcome, welcome, Joe. Appreciate you being here.
Yes, thanks for having me, Ida.
Absolutely. So when you talk about design your exit now, what does that look like?
Well, I mean, designing an exit for a business owner that, let's say, they've been running their business for many years. In some cases, they're decades,
Mhm.
and they tend to face a lot of complexity as they get towards their end game. So I like to describe it as though, like in a football analogy, that you know the founding business owners we work with are very good at running their business. They've created wealth. They create value for their employees, their customers, their people that are associated with their business. Um, but once they get to the 20-yard line, between the 20-yard line and the end zone, is where they tend to face all the complexity that they haven't faced before as they try to maximize what they've built. So they're dealing with a lot of financial decisions, a lot of business decisions. There's taxes, there's how to invest the money, there's how to mitigate the taxes to pay on the transition or the sale, how to transfer wealth to their loved ones, how to protect it from various risks. And then there's all the business decisions on how do they want their legacy to look on this business they built in their community, their employees, how do they want them to be treated, dealing with different advisors, accountants and attorneys and financial advisors and M&A professionals. And there's just so much they have to deal with that they don't know how to coordinate it all. And that's where I think having a personal chief financial officer to coordinate your business planning and personal wealth planning into a unified approach is so beneficial to those types of business owners.
Well, it definitely sounds like it because my head hurt already just with what you just described.
Yeah.
So I already know I would never, ever, ever try to exit without a professional. Be-
And the thing is that there's multiple professionals in many cases that you're dealing with. As I mentioned, and these professionals tend to operate in silos, professional silos. The accountant works with you on accounting issues, and the insurance and the financial advisor. But what I tend to find in my experience is that these advisors are not crossing over the border and they're not collaborating. They're sticking in their silos, and that leaves the business owner to be the quarterback of all the siloed advice that they're receiving. And it's not what they're experts at. It's not what they've done. It's not how they've built the wealth that they've built to this point. So they don't know how to proceed from there. And that's where having coordination of the planning, having one team, I like to say having one team sitting around the table talking about you and your agenda, where you are today, where you're trying to go. That's a value added service, I believe, that business owners should seek out.
Absolutely, because we all know, that's a whole huge issue across the board in almost everything that you deal with, nobody talks to each other about you.
Yeah, and it's pretty shocking in some cases, you know.
Yes.
So my background is I've been in the wealth management industry for 40 years, and I started my own wealth management company 25 years ago, Arlington Wealth Management. Um, we had very much an investment focus in the early days, but as our clients became wealthier, we realized they needed more than just investments. They needed advanced planning, how to mitigate taxes, how to transfer wealth to their loved ones, how to protect their assets from catastrophic risks, and all different types of advanced planning concerns that they had. And then as we began to work on advanced planning with clients and ran into business owners, we really found that was the sweet spot because they have added complexity to their life with the business component of the decision making as well as the personal wealth component of decision making, and having some unification and coordination of that strategy is really where I think business owners find value in coordinating uh, the planning and the advice.
Absolutely. So when should this designing begin? When should a company start the design process of this?
Well, there's different answers to that. The right answer is you should do it at the start, right? You should, um, you know, uh, start your company with some sort of end in mind, right? That's ideal. Like, what is the end game? What am I building toward? But the reality is most business owners don't do that. Most business owners start a business because they have an idea, they want freedom, they want to do things on their own terms. They don't want to work for an employer. They want to kind of cast their own destiny, and they just get into it and roll up their sleeves. And, if they're successful, they find themselves several years later, in some cases decades later, that they now need to kind of retrench and look back and say, okay, let's reset things. How do I reposition this business for another owner? If I'm going to monetize what I built, maybe there's going to be a buyer that's going to step in and buy it, or maybe there's going to be transition to family or management or employees, whatever that transition looks like for that business owner. They need to redesign the business so it's valuable to the new buyers, the new owners, right? It's not just all centered around them and what they've built.
Okay, so what does it mean to boost the business value and personal wealth with smart pre-sale?
Yeah, so most of the business owners we work with are in that pre-sale period. So we're advisors for business owners that are in that pre-sale mode where they're kind of at that 20-yard line, and now they need some guidance on how to get into the end zone. Um, and the let's call it the life cycle of decisions that a business owner has to make. That's where the planning should start. And it should really start with creating a personal action plan, I like to call it. Going through strategic planning with people that have done this for business owners before. Not with advisors that maybe are doing it for the first time, or advisors that don't specialize in helping you maximize what you've built in a business and how it relates to your personal wealth. So there's a lot of different planning that needs to go into place. So let's say, as an example, when we're working with a business owner on pre-sale wealth planning, we'll run down two paths. One is the business planning path, and the other is their personal wealth planning path. So the first thing we'll do from a business planning path is assess their business value in the marketplace, not how they value their business, how the market's going to value it. how a buyer is going to look at it. So they could see what it's worth. They could see what their industry, the range of values in their company have sold in the last few years. So they get an understanding of how the market values their industry. Take a look at a little bit of an assessment of the quality of their business and where they might sell in that range based on their attractiveness as a company. And then look at a lifetime cash flow plan. So the things that they want to do, the life that they want to live, what is their lifestyle like? What are the expenses? What are the income, the inflows and outflows, taxes, et cetera, and see how it all fits together. And that gives the business owner a lot of clarity if they're at their, what we call their freedom point. If they could sell their business along with other assets that maybe they've accumulated through the years, and they have enough wealth to live the life that they want without being concerned about finances, they've reached the freedom point. And then from there, we know how to plan investments, taxes, asset protection, wealth transfer, et cetera. If they're not there, then we have to enhance that value. Let's work on ways to enhance the value, grow the business, so some strategic planning on that level, and then ultimately how we're going to harvest that value so they could live the life that they want and reach their freedom point.
Okay. So, what does the business owner need to bring to the equation to support you in your work?
The business owner, honestly, what they have to bring is a desire to maximize what they've built. So they have to genuinely want to maximize their life's work. And it's not going to happen by, doing kind of piecemeal type of planning. So having the coordination, they're going to have to put some time into it. There's going to have to be some effort. Going to have to, work with advisors and feel comfortable of taking advice and receiving guidance from professionals that are experts in guiding a business owner down the right path based on where they want to go.
Okay. Wow. So, Joe, if businesses want to work with you, how do they connect with you?
So there's a couple of different ways. For one, we did write a book called Exit by Design, and there is a website that you could go to, and any listener of our show here today can download the ebook version. It's exitbydesignbook.com, and you can connect with me there. Secondarily, I would lead you to our ClearPoint Family Office website. That's clearpointfamilyoffice.com. And there's a lot of information there about how we work with business owners and, a different type of advisory service for business owners that's different than the conventional, traditional wealth management approach. And they can connect with me there as well.
Okay. So, what does it mean to avoid the dumb tax? What does that mean?
Yeah, so the dumb tax is a play on words that basically means that business owners don't know what they don't know,
Mhm.
right? And a lot of times, most business owners a year after they sell their business, something like 85% regret that they've sold it. And it's not because that they sold it, it's because that they regret how they did it. They may find that there was a better way to exit. They may find that that there was a different tax strategy that could have put more money into their pocket. They could have found there was a way that they could have made sure their employees were treated better during the exit, or their legacy was preserved, or the company culture was preserved. Or in some cases, it's because they didn't plan their personal future ahead of time. They waited until they sold the business and then tried to figure out what they were going to do with their lives. And, it's a big change in the life of a business owner that's been really personally involved for decades. So going through that personal action plan where you could design the exit and shape your legacy. It requires being proactive. It involves getting educated about all things related to exiting a business and then designing an exit on your terms so you don't regret it later.
Yes, yes. And it sounds like there's a ton of things involved, not just on the business side, but also on the emotional side of things.
It's very much psychological, emotional, big time. And a personal action plan, really the goal there is to eliminate the dumb tax. We never want to hear one of our clients say, I wish I would have known about, blank. You could
Mhm.
fill in the blank there.
Yes. Now a, the fractional family office. Talk about that.
Yeah, absolutely. So the fractional family office is designed to help business owners coordinate their business strategy with their personal wealth planning centered around the life and legacy that they want to build. So these are seasoned advisors in various professions, financial advisors, accountants, attorneys, business advisors, insurance, risk mitigation specialists, et cetera, that come together and form a strategic plan for a business owner on how to maximize what they've built through coordinating the business strategy and the wealth planning. So that's what a fractional family office, or at least ClearPoint's family office, is designed to do. There are various other types of family offices that may focus on executives of companies or real estate investors, for example, or other types of families that have some similarities. Our clients tend to be founding business owners that have been building value in their business for decades and now are kind of at that crossroads where they face their end game and they want to maximize it and and achieve their essential life goals.
Yeah, gotcha. All right, beyond the sale. So, how do you help the business owner transition from the business to the new life design? How do you help them do that?
Well, it starts with, I think, an education of what a business owner is going to face as they enter into that pre-sale or pre-exit planning,
Mhm.
right? So most business owners haven't done it before. Certainly there are some that have, exited a business in the past and now they're exiting another one. So they have some experience in it and know a little bit about the process, but most haven't. And educating them on all things related to a business transition. Who are the potential new owners? How are we going to transition this? What will they look for in my company? How will they value my company? Buyers value companies different than owners do. Who is that ideal buyer in your mind? Is it a strategic buyer? Is it a competitor? Is it, private equity, an industry consolidator? Will you transition ownership to family or internally to employees? What role will you have in the company after you sell or transition? Will you still be involved? If so, what is that role going to look like? Will you stay on as a consultant? How long? How do you want your employees to be treated during and after the transaction? You can control these things much better if it's part of the conversation, before than it is after the transaction. And then, of course, there's the personal part. What will your life look like? For most founding business owners, the business is their identity. It's what they're most proud of, and sometimes even more so than their own children, and they'll tell you that. Uh, but most likely, they've been building a business for years, and they want their legacy to be preserved, right? Maybe they've established strong brand name in the community, for example, and their customers. They want to make sure the new owner is going to carry that on and it won't be tarnished.
Now, let me ask you, when it comes to the new owners, how do you how do you really know that the new owners are going to carry the things the way you want to? Because after they've purchased your business, at that point, they can pretty much do whatever they want to do. So, how do you ensure that piece of it?
Well, there are, there are various ways in the negotiation of the transaction that can help. You can never eliminate, but you can help minimize the
Mhm.
potential that the company is going to change its culture completely after you sell. Um, so, you could, for example, there are going into the pre-sale planning, there are ways you could structure employee key person compensation that will keep people involved beyond a transition. So that will keep, management and, people that are there running your company now involved with the new ownership. So you can negotiate that. But it's more just, I think, thinking it through of what you want that legacy to look like, and then doing your best of planning it rather than just, we call exiting by default. So the book is called Exit by Design if you're proactive in it. If you're not proactive, you're going to exit your business one way or another. Every business owner is going to exit, right?
That,
So why not plan it out rather than just letting it happen? That's what we call exit by default.
yes. So let's talk a little bit about the book, Exit by Design, and what will people take away from that book?
Yeah, so people will take away a number of different concepts. I think one of the key ones is we've talked about many of them already, Ida, but determining your freedom point, I think, is huge for a business owner. Most know how they're getting their income today and look at their business as providing that income, but they can't understand or really get clarity on where they're going to get their income after they sell,
Mhm.
right? So that's where developing a lifetime cash flow plan and determining what your freedom point, that's why we always start there when we're working with a new business owner, because it provides so much clarity and confidence to the business owner. They could see the future, whereas right now it's just, kind of a cloud of dust. It provides us a lot of clarity as well, and we could be better advisors because we understand where they are, where they're going, and what needs to get done to help them, reach their freedom and achieve their essential life goals. So freedom point's a big one. I think working with a planning team, not individual advisors, is another key concept of the book. And having a team of advisors that sits around a table talking about you and your agenda, not them and their agenda. That's a key that's very important for a business owner that wants to eliminate planning gaps from the siloed planning, and wants to capitalize on their biggest opportunities. A collaborative approach, a team-based approach is definitely adds value. We talk about your sellability score in the book, that so know how you buyers are going to look at your business, what their criteria is, what their metrics are, what they find to be attractive in a business. Oftentimes it's much different than what an owner finds to be attractive. Coordinating that pre-sale wealth planning with the business strategy, as we've talked a lot about today, is key. And then designing that personal action plan of what they want the exit to look like, and having that laid out so they could exit with satisfaction and not regret it like most business owners do a year or two later.
Mhm. Absolutely. So you mentioned how the buying business will evaluate. Can we talk a little bit about that? Because I
Sure.
know it's different than how you may value it as the business owners.
Yeah, very much so. So different people see the value of a business in different ways. For owners, our business is priceless. It's everything. We built it, and there you can't put really a value on it. But buyers look at things differently. They focus on metrics that go beyond just making money. So things like how dependent the business is on you, the owner. If your company depends heavily on you, it isn't as valuable to a buyer unless you plan on working for them, right? So keep that in mind. And getting you out of the center of a business's operations makes it much more valuable to a buyer, right? Because most buyers don't want to buy a job. They want to buy a business that is profitable, and they have to see how they could take what you've built and then take it to the next level and how they could profit from it, not how you profited from it in the past. What is your competitive advantage? What is your unique advantage that differentiates your company from its competitors? That makes it more valuable. So like a strategic buyer that can offer that advantage to an existing client base, customer base, those are usually the highest valued businesses because they can profit, they could see ways to increase their profit by buying your company and integrating what you do that's unique into their existing operations. Do you have recurring revenue streams as opposed to having to get a new client, signing new contracts, starting over month after month, year after year at zero? Recurring revenues adds predictability to a business and is very comforting to a buyer. And they'll value recurring revenues much higher than businesses that are just, bringing money in and making a profit, but then having to either resell that customer or find new customers to grow. Those are the big ones. There's a bunch of others, but I would say if I had to choose the three top ones, it's owner dependency, it's competitive advantage, and it's recurring revenue streams.
Yes, yes. Okay. Well, you definitely explained everything very clearly. So, and the takeaway for me is you need a team that's collaborating because most businesses going in the door don't have a clue. And even those businesses that have actually exited their businesses before, they could tell you horror stories.
Absolutely. That's where we got the term dumb tax, right? Where people, and they'll admit, I wish I would have known that. I wish I would have spent the time to learn more about it or work with advisors that know more about it. There was a survey done by an organization called Accelerating Entrepreneurial Success. And so they surveyed business owners that were planning to sell within 5 years, and only about 6% were actively taking steps to maximize their personal or family wealth. Most are just so focused on the business, operating it, or if they're in the sale process, they're focused on the transaction. They don't do that pre-sale wealth planning that misses significant opportunities on taxes, on cash flow planning, and potentially on asset protection and asset transfer strategies that you have to take care of before the sale and you miss after the sale.
Yeah. And I mean, if you're the type of person automatically, I know I'm a planner. Or automatically. That's just in my DNA. If something is not in my lane, I'm going to seek help immediately because I know I'm going to mess it up because I don't know what I don't know.
And it takes a certain person to admit that.
And it's important because I mean we all have our lane, so to speak, that we are in. Like for example, my background is IT, so I'm good at IT, but there's a lot of people that aren't.
Correct.
So knowing what you can do, and to me, a lot of times people don't want to spend the money, or they come up with, to me, lame excuses not to seek the help that they need in order to get the outcome that they want to desire. But in this situation, I would never ever try to exit a business without a team. Ever, ever, ever.
And many business owners, try, and those are the ones that tend to regret it. And of course, that,
Yeah.
it sounds like I'm beating my own drum here because this is what we do for business owners, but there's just a tremendous amount of opportunities that business owners have to maximize what they've built,
Yes.
if they are proactive in planning and learning and being educated and working with advisors that have gone, it's not their first rodeo, that this is what they do for business owners exclusively.
Yes. And that's a special person because, I mean, when you first came on and you outlined all the things that have to be considered, I was scratching my head. I'm like, oh my God, it is a ton of things. And if you try to do that on your own, you're definitely going to miss something without a doubt.
Yeah, so we like our motto is that we guide entrepreneurs from complexity to prosperity, right? And it's everything in the middle of, where they are, they see all this complexity. How do they get, like I said earlier, from the 20-yard line into the end zone? It's between those 2 points that all the complexity exists, and navigating through it with confidence and clarity, getting to the other side. That's that's really what our firm is designed for. And but we're not the only ones. Certainly, there are other advisory firms that help business owners do that too. But it's very unique, right? The traditional wealth management really is not set up to help business owners in the way that they need help. Like, they may be able to manage investments, but how they are they experts in helping you maximize your enterprise value? That's probably where 80% of your net worth is, right? But most just want to talk about investments. So having advisors that could cross over, like I said earlier, those professional silos and help you with a coordinated approach, I think is going to add a lot of value to your life.
Yes, I think so. Because, I mean, it sounds like it. It's like it's a team working for you, you know, and it makes a whole big difference when you have a team of people looking at you and only you.
Yeah, because you could build tailored strategies that way,
Mm.
um, and
Yeah.
have that unified planning.
Yes, exactly. And I like unified planning because it to me it works better because not one person knows everything.
Not one person, even nor even one team. So with our family office, we have some deep experience with our team, but we also have an extended bench of professionals that are outside of our company that we could bring in: expert tax planners, expert risk mitigation specialists, legal advice, business advice,
Mm.
because not even one team could be experts in all these different areas, and certainly not for all different types of business owners in different industries. So we could reach into that deep bench and bring it in when a business owner needs it, if it's beyond our core competency. I think that's very important.
Yes, absolutely. Absolutely. Wow, Joe, you have really laid it out today. I really, really appreciate this conversation. Again, how do business owners contact you?
ClearPointFamilyOffice.com. You could schedule a initial discussion there, if you'd like to connect. You could connect on LinkedIn, of course. And I'll give you my email is jlopresti@clearpointfo.com.
Okay, well, I definitely appreciate you taking time out of your day to drop all these nuggets on us because I mean, you really made it, you made the process clear what needs to happen without getting into the nitty-gritty of it. I have a great idea as to the process in which exiting a business needs to flow. So I appreciate you sharing that with us. And I'm looking forward to more conversations with you because people need to kind of hear this a lot because they need to really, like you said in the beginning, you really need to start your exit strategy when you start your business. However, most of us are not thinking that way because we have no business at that point. We trying
Yeah.
to make, we trying to build the business. But having that in the back of your mind while you're building is a critical piece.
Yeah, and the reality is most really start to think about it, say, 3 to 5 years out, which is plenty of time
Mm-hmm.
to, proactively plan and maximize that enterprise value. If it's 18 months or a year, you really have to go right into preparing the business for the sale at that point.
But at least 3 to 5 years. You
That's ideal. That is ideal. Yes.
okay. All right. Thank you so much, Joe. Appreciate you truly.
You're welcome, Ida. Thanks for having me on today.
Absolutely. Thank you, audience, for dropping by.